Have you ever heard someone mention funds when talking about investing, leaving you scratching your head? You're not alone. Funds are a powerful tool for growing your wealth, but they can seem complex. Here's a breakdown to make things clear. Think of a fund like a big pot of money. People like you contribute their savings, and that pool is then managed by a professional, a fund manager. This manager acts like the captain of the ship, deciding how to invest the money to achieve the fund's goals. Variety is the spice of investments. There are different types of funds, each catering to specific investment goals. Mutual funds. These are like a diversified all-you-can-eat buffet for your investment appetite. A mutual fund might hold a mix of stocks from various companies across different industries like Apple, Ford, and Johnson & Johnson. This diversification helps spread your risk. If one company does poorly, it's balanced by the other's performance. Real estate funds. Ever dreamt of owning a piece of a fancy office building or apartment complex? Real estate funds let you do just that, without the hassle of being a landlord. These funds pool your money to invest in various properties, offering you a share of the rental income they generate. Money market funds. Think of these as a safe haven for your cash. Money market funds invest in very low-risk, short-term securities like government treasury bills. They offer a bit more return than a traditional savings account, but with slightly higher risk. Benefits of joining the fund club. Why do people choose funds? Here are some key advantages. Diversification. As mentioned earlier, funds spread your money across different investments. This reduces risk compared to putting all your eggs in one stock basket. Expert management. Fund managers are financial whizzes. They research and select investments based on the fund's goals, saving you the time and effort of doing it yourself. Accessibility. Funds allow you to invest in a variety of assets, even if you don't have a lot of money to start. Imagine buying a single share of Apple stock. It could cost thousands of dollars. With a mutual fund focused on technology companies, you can own a tiny slice of Apple, along with Amazon, Microsoft, and others, all with a much smaller investment. Keep your eyes peeled for fees. While funds offer many benefits, there's no such thing as a free lunch. Fund managers charge fees for their services, typically a percentage of the assets under management. These fees can vary depending on the complexity of the fund, so be sure to understand the fee structure before you invest. Investing Made Simpler funds offer a convenient and accessible way to invest your money. They pool your resources with others, letting professional managers handle the investment decisions, all while giving you a chance to grow your wealth over time. Remember, do your research and understand the fees involved before diving in.